The $84 trillion, I think is the quote that's been bouncing around, transfer from most of the family offices to ultra high net worth community over the next 10, 20 years. There's a lot of points that can be made on that. I think something that's overlooked quite a bit is that it's not going from, our parents' generation to straight away to Gen Z and millennials, right? Gen X is actually getting the majority of wealth in the next 5, 10, 15 years.
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast. And today we have Ryan Austin with us. Ryan is the CEO of Arondight Advisors, where he leverages his network of family offices to connect startup founders and fund managers with the right people to fund their business. In this episode, we talk about how Ryan built relationships with family offices, the $84 trillion wealth transfer, how is the new generation different from the previous generation in managing family assets, why family offices are a great source of patient capital for startups, what do family offices look for in a business, and lots more. So, without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast 10X, where I help VCs start and run their own podcast. While I was running VC 10X, this podcast that you're listening to right now, I asked my VC guests, why don't you start your own podcast? I mean, it's the best form of marketing for VCs. As they say, VC is a people play more than even a capital play. A podcast enables you to put your people at the front, your portfolio founders, your partners, and co investors. It's a great way to build a brand and win competitive deals. It activates all your marketing channels in a single shot, be it YouTube or blog post or newsletter or social media. Everything gets activated in a single shot. And I get the same response from all the VCs that it's a lot of work and we don't have the time for it. I said, all right, let me handle the work for you from pre recording, editing, publishing to making social media clips. All you have to do is show up on a call, hit record, do the recording using the well researched outline we provide you with, and you're done. We handle everything else. You know what they said? All right, let's give it a shot. So if you are a VC and want to up your marketing and branding game, I'd love to work with you. And if you're thinking there are too many VC podcasts already, remember there are way more VC firms out there. And if you're not standing out, you're losing out. So if you want to work with me on starting your podcast, go to podcast10x.com and book a call today. I'll add the link in the description and show notes below. Look forward to working with you. Hey Ryan, so good to have you on the VC 10X podcast. How are you doing?
Great, Prashant. Thank you for having me on today. Doing well.
Totally. It's good to have you on. And to start things off, can we have your story first and how you built relationships with family offices and worked with them in the past?
Sure. So I started off in the equities space. I was an English major. I didn't go to school for finance or anything, but I had the privilege of connecting with a really great mentor, Roland Perry. And he was a retired stockbroker from Chicago, and he built one of the first newsletters, like newsletters in the industry, late 90s. He was very well connected, and he would work kind of a mix of PR and investor relations, IR. He'd work with companies that were overlooked by Wall Street, and he needed some help and kind of showed me the ropes of the space, from the back end, kind of the administrative part, to becoming a junior analyst, to understanding how to create investor research reports, what big investors are looking for, understanding, the mechanics, the key financials, things of that nature, the fundamentals. And from there, very early on, I went and worked for a company called Corporate Connect. They did what Roland did at a higher scale. They would film companies on the floor of the NASDAQ and New York Stock Exchange. Really exciting stuff, startup environment. And from there, I was able to acquire more responsibilities. And I ended up helping manage one of their main packages, which was connecting founders with family offices. So this is going back to 2014, 2015. From that point on, I ended up being kind of the point guy. If we were doing a family office symposium, I would reach out to the families and see who we could get to come to New York City. And from that point, I ended up moving from New York to Florida for a few years, took a worked more in PR, helped run editorial for newswire.com. um, Crypto, Bitcoin, the Web3 was really starting to transcend into the zeitgeist, the mainstream consciousness of most people. And I thought it was very exciting. And I ended up making a lot of connections there. So I helped run marketing and communications for OKX, CXIO. Uh, the last one was Prometheum. And this is, I'm jumping almost 10 years forward, but more when that space, started to continually, disappoint people, I decided to go a little bit more towards my roots, and I had still nurtured and maintained the connections that I had made at Corporate Connect. Um, I should also probably mention I went to Stony Brook University, which is very close with Renaissance Technologies. Jim Simons just passed away. Medallion Fund. Those guys are, really big on Long Island. They play a big part in the school, and just a mix of, I would say, personal life, where I grew up in the North Shore of Long Island, mixed with the professional experience. Um, but I would say the way that I was able to maintain and nurture the network was A, not pitching my family offices on crypto and Bitcoin, thank God. But B, just maintaining sincere interest, right? I was hungry, I wanted to learn, and I didn't want anything from them other than conversation or learn. And I think that people in general will want to help you if you're sincere and open and willing to learn, right? And being young probably helped me at the time as well.
Absolutely. Thanks for sharing that. And let's talk about the massive wealth transfer that is often talked about in the family office world. So, what is that, and how big is that shift going to be?
Sure. So, yeah, the $84 trillion, I think is the quote that's been bouncing around, transfer from most of the family offices, the ultra high net worth community over the next 10, 20 years. There's a lot of points that can be made on that. I think something that's overlooked quite a bit is that it's not going from, our parents' generation um, to straight away to Gen Z and millennials, right? Gen X is actually getting the majority of wealth in the next 5, 10, 15 years. So I think a lot of the conversation, and rightfully so, is about ESG and impact investing and, you know, how to improve the future. That's, it's still a steady march in that direction. I think that Gen X is kind of being overlooked, and their interests, and many of them are already motivated and interested in that space. But that's something of note that I think is worth mentioning. And then in terms of like how it's going to affect family office strategies down the road, I would say that, yeah, that is the trend that we're seeing, the shift from traditional investments to more dynamic and impact driven, more of a focus on philanthropy, which is already, I would say a big part of the portfolio of family offices, but, questioning what's going to improve the world, not so much about how, what will generate the most alpha.
Right, totally. Thanks for sharing that. And what are going to be the biggest challenges of this transfer of wealth?
Oh, I have a lot of opinions on this, but I would say it really, and this is something, myself included, we have a tendency to generalize about family offices, and just like my family is different from your family, not everyone, no family office is the same, right? So I think the challenges that exist now, and like what is the ultimate challenge of a family office, is the preservation of wealth, growing the wealth, ensuring it doesn't dissolve within 1 or 2, 3 generations. Um, I, I think that balance of preserving the family legacy with while innovating, while changing, uh, you know the role of education and governance. I mean, that is, family offices are still so new. There's only a few that are really, I would say, competing with like the top venture capital firms, private equity firms, in the world. It's still, as a space of, it's still relatively new, right? They started to emerge really in the early 2000s. That's when the word family office, the phrase, started to be used. So I think it's still so early on that the challenges that we had in the early 2000s still exist today.
Right, absolutely. And so, how do family offices really think about investing? Are they like all over the place about it, or are they more organized about it? Have a team in place, or are they outsourcing it? How do they do it?
Right. So, and that's a great question, and it kind of goes to the point that I had just made. It really depends, on the family. The Pritzker family, for example, like they're used, I would say, as like one of the top, upper echelon type of family offices that they have a team of people that deal with wealth management, right? A single family office. And they also have multifamily offices, which, it's a shared burden between a couple of different families where it's smaller, maybe 5, 10 to 50 million per family, managing using the same lawyers, same wealth managers, et cetera. But then I would say the majority of families are still figuring out how to streamline, become, maximize their efficiency. It's very hard. It's hard to generalize in that.
Absolutely, completely agree. And we just did an episode, The
Mm,
Multifamily Office Manager, and
mm.
we kind of did a 101 on how multifamily offices work and the challenges of different families. So, listeners should also go check this out, that episode out after they are done listening with this one, because that's going to have a lot of learnings as well. And
Yes, and let me add really quick that
yeah, yeah,
multifamily
sure.
offices get a lot of flack, like a lot of people. So what I do at Arondight, right? We connect founders with family offices. I try and matchmake. I know, which family likes tech. I know which family likes energy, and what families are looking for impact investing, so on and so forth. I have quite a large network of family offices, and a lot of my clients will say, or a lot of colleagues will say, well, we're looking for single family offices, not multi-family offices. And I under I understand people want the most wealth. They want to go straight to the top. But I find that in terms of efficiency and effectiveness, getting a multifamily office on board is sometimes more valuable. Things move a little bit quicker than a single family office, in my experience. So that, and a lot of, the thought leaders, Ron Diamond, who I know, you've interviewed, mentors of mine, they are saying that the future is more multifamily offices. A lot of single family offices, shouldn't exist according to him because, of a trend. And I'm sure he discussed that on the episode that he had with you, Prashant. But I think that the future is more multifamily offices.
Right, absolutely. That's very interesting. And like you said, the episode with Ron was also a great one. He also works with multiple families and invests with them. So another
Mhm.
episode that people should go check out once they're done with this. And then let's talk about family office making direct investments, because that's something you just talked about, that you're
Sure.
connecting founders with family offices, right? So what we have been used to seeing is like family offices investing into VC funds, and then VC funds investing into companies. But now we are also seeing a new trend that family offices are going direct and making direct investments into companies and startups. So how much of a
Mhm.
trend is that, and is that becoming more and more popular?
Yeah. So yes and no. I feel like, so I had mentioned, early on in my career, there was a family office package, and you're right, that is what I do today. I think it has more to do with the right deal instead of families coming out of the woodworks and wanting to participate in, like, venture startups, or startups in general Series A rounds, so on and so forth. It depends on the family. It depends on the deal. I as for, VC funds, so I started off when I started Arendite 2 years ago, and like I said, going back to my roots and leveraging my network of families. My goal was to aim for Series A investments because I was reading the same thing, and it makes sense, right? I mean, you have pre-seed, seed, angel rounds, right? That there's a lot of risk there. The reward is very high, but I saw that the inflection point, the really exciting point from my point of view, and also from engaging with startups, was that Series A. Once they close a Series A, it's really off to the races, and the odds are still against you, but that's the inflection point I saw. And I read a lot of the same thing I'm sure you did about families participating more in direct deals. And if you go back, that was possibly more of the case during, we'll say, I mean, if you ask somebody like Ron, again, who I've learned a lot from, he would say that in during the crash of 2007, 2008, a lot of families, ultra high net worth investors started to distrust Wall Street, and they went out on their own and started to make investments. Maybe that's why it started to get the press that it did. And then things stabilized. And then again, during COVID, you saw a similar trend, and the market was kind of messed up back then. You kind of had to really mess up in order to lose money just for the state of the economy. But as things started to come back, in 2021, 2022, the market's not in a great place right now. A lot of families got punished and lost a lot from direct investing. So it kind of goes back to what I said. The more efficient families, they've continued to participate. If they see the right deal, right? If it's a family that had a huge liquidity event in the tech space and they identify a really great Series A or Series B that's in tech, they'll jump on it and it makes sense. When you start seeing families go outside of their comfort zone without experts on board, then you know, it it can become an issue. So I have, like I said, Series A, companies and clients, founders, but I also have started to get this past year, really, venture funds as clients, and that's the argument. So one of which being, I had AI space. We're closing their first round right now. Really exciting. Runtime Ventures is my most recent client. They're in cybersecurity. They're two founders. They're not really VC guys. Which is exciting. They've had exits, David Endler and Michael Sutton. And the whole selling point that I've pitched and started to have a lot of success with the families in my network that don't have a cyber background is that these guys are the experts. They can help manage the funds, but you could also have access to deal flow, right? They have a really strong portfolio. So that's kind of the buffer that I put in, right? So whereas if I had just a single company that was cyber, I wouldn't go to, the gas and oil family that I know, or the e-gaming company or family that I know. Now I can say, hey, these are trustworthy experts, right? And the marketing that I've done, interviews, my newsletter, and just the calls, that's been something that I've started to leverage and has been kind of exciting to give them exposure to the trusted experts.
Absolutely. Makes perfect sense there that you're not just working with founders, also working with VC funds and giving good experienced managers to family offices to back. Great work there. And talking about the wealth transfer that we were talking about,
Mm.
how is the new generation that's going to get the wealth will different from how the previous generation managed wealth? Are there any significant differences in their approach to managing wealth?
Definitely. And I would say, so I've seen both. I've seen, I'm turning 33 later this month. So you have, people presumably our age, Prashant, I know you're a bit younger than me, who just from the culture, like the internet culture and, drop shipping, like having experience with like e-commerce and stuff, right? That's kind of a new trend. A lot of the selling points of these new, founders or families that are investing in these firms, the selling point is that the manufacturing is set up well for the workers, right? They want to know where the product's being created from, across the board, not just in those spaces. That's something where it's not good enough to cut costs for cheap labor anymore. It's more about, again, the impact, the care, improving the conditions of everybody from the bottom up, really. So that's kind of a trend and something I've seen. Also, alternative energy sources. I did a report on impact investing a little bit less than a year ago, and family offices. I can share the link with you after, but we identified, and I can't remember the company, but I should have anticipated this question, but using nuclear energy, Avalanche, that's the company. They had closed a Series A. That's why I covered them. Really exciting. And they were figuring out ways to use nuclear and harness nuclear, which is a really interesting, right, resource that I think gets ignored a lot in terms of the, alternative energy sources. So things like that would really make a huge paradigm shift from today. So also, and they're so sometimes I feel like impact investing is played out, right? You have ESG, right? Which again, they align, they're not quite the same thing. One's more political than the other. Um, I think there's bolder, I think people our age are willing to back bolder companies and visions, right? Assuming that it aligns and it's sturdy. But I think at the end of the day, Prashant, despite the generation change, when you're investing in a startup, you're usually investing in the founders. You're putting your money in the founders, the team, the people behind it that make it happen. Um, I think that's actually going to stay the same, and rightfully so.
Yeah, absolutely. So, founders who are fundraising right now, do you think they should be having family offices on their radar, or is that not worth the effort in terms of how many family offices are actually making direct investments versus the ones that are not interested in that?
Well, this is something that I think this is part of my thesis, and the company and the product that I put together is that families are absolutely taking a larger seat at the table when it comes to fundraising, period, right? Yes, there are, direct deals are happening all the time. Again, it's secondary markets, right? So you're not going to hear about it frequently. But I think that just as much as you should be targeting VCs and private equity firms, you should 100% be targeting family offices. And it's difficult to do it, right? That's why I exist. I have the relationships. Families aren't as streamlined or transparent enough to be that as easily found as the top venture founders. But usually when you start to get those big guys on board, the big, venture funds, private equity firms, they know a lot of it's a small world, right? That a lot of families usually will hop on board and vice versa. So that's what I think is the most exciting thing coming up in the next 5 to 10 years. Families will continue to own a bigger share of the startup market.
Right, that's good to learn. And secondary market is actually something that I believe family offices would be very interested in, since
Oh yeah.
they have the patient capital that can
Yes.
go with it. Because a lot of secondary transactions actually have to offload company or get the exits for VC firms or the investors that are holding those investments. They want to get some sort of exit. That investment might still be good, and that's where family offices can have a really good advantage, right?
Absolutely. And that's, yeah, and that's the thing. And it's becoming more well known. And again, people will ask, why should I target family offices instead of other institutional investors? And the longer investment horizon, that concept of patient capital or permanent capital, which is kind of a newer concept, which is pretty much the same. There is no, you know, they don't have to appease their bosses or the people whose money they're investing. They're investing their own capital, right? A big thing. It's when you're a founder and you have barely a year left of runway and you're trying to close out a round in order to keep your vision going, keep your team, being fed. It's tempting sometimes to take the first big offer, right? $5, $10 million. It's like life changing, right? And that could be the difference between, success or failure. But for the people that are not targeting the family offices, I feel like the issue is that a lot of these venture capital firms and private equity funds, they it's a 3 to 5 year outcome, right? They're financial engineers. They're not operational partners. That's the key difference. Not all family offices, but when you get the right family office, just like not all venture capital funds, like everybody's different, right? But the right family office is the best partner, I think, for a startup, particularly if that's their area of expertise. If they've done it before, right? They're the ones you want on board, and they won't flip and strip your company and then sell their share in 3 to 5 years. They might just want, their nephew or son-in-law to get a job, or something like that, right? But instead they'll hold on for 5, 10, 15 years, as long as it takes, as long, again, depending on the arrangement that you have with them, the communication, so on and so forth. That's the magic of having a family office. I mean, it's designed for those types of deals. So we hear a lot about, the success. It's because of those. And yeah, there are failures as well, but when it works, it works. And My clients understand that, and I think more people are starting to see the value in having family offices participate as investors.
Right, totally. Thanks for sharing that. And what are the global trends you are seeing in the family office investing world?
So, secondary markets, I think, is something, and I'm reluctant to say it's new. I feel like you have a lot of families that have kind of always participated in it. Again, I have a family office in Germany, the Guterman family, and they participated in a lot of the early, you know, internet, not early internet, but like the Facebook, the big social media movements. They got into those deals through the secondary markets pre-IPO for Facebook and Twitter. They love those types of deals. And again, they're streamlined. The Gutermans, Thomas Guterman, hey Tom, great guy. But I think that in terms the global trends, increasing allocations to tech, healthcare is something. Obviously, sustainable investments, cross-border investments. I have a lot of clients, families, or just ultra high net worth investors from Dubai that want to begin to enter the U.S. markets, right? And that's from a variety of deals, whether it's establishing their footprint in the public markets, getting on the Nobo, or you know opening up accounts here in the States in order to participate in rounds that they wouldn't have access to in India or in Dubai. Um, that's something that I've seen with my international families.
Right, that's good to learn. And uh, talking about family offices and the ESG and the impact investing aspect or philanthropy aspect,
Mm.
uh, how much of the funds in family offices actually go to philanthropy and how much actually go to proper investing?
I want to, and I don't know if I would die in this hill, but I feel like 10% I've seen being thrown around in some of the larger portfolios. I think it depends again, really, with the family values.
Right.
Um, the families that have been around for more than two or three generations, which is rare, but of course, they're there. Those are the ones that have the best, I think,
Mm-hmm.
charity and philanthropy systems. They have it down to a T. They know what they like to support. They know what their
Mm-hmm.
fundraisers are. Maybe a relative died of cancer, and they're backing some sort of
Mm-hmm.
cancer charity or fund. Something that Ron Diamond, and I should mention this too. I just very recently was made strategic advisor for Family Office World, which is a media platform that he's building, him and his team, Cody Meltzer. Um, and over in Chicago, I think that, and something that Ron always talks about is his mentor, Michael Milken, and the way that, he was diagnosed with prostate cancer. He created the Milken Fund or the Milken Institute. And Ron says that if it wasn't for the way that Milken ran the Milken Institute, we wouldn't have a cure for prostate cancer that we do today. He ran his philanthropy like a venture, a founder would, right? Run it like a business. Um, I think that there's something to be said there. Um, Totally kind of jumped off topic, but you can help me bring it back. I
Yeah,
don't know if I answered the
totally.
question for you.
Yeah, the question was mostly about comparing like family offices focus in terms of investing into other asset classes versus philanthropy, right? And how much goes there. So that was the main question. I think you answered that. That I think around 10% goes to philanthropy as a ballpark
Yeah, and I might
figure
be
in that.
totally off on that. I feel like I read
Hmm.
that somewhere, but yeah,
Okay.
don't fact check me.
Yeah. Awesome. I will not do that. Great. So let's ask you this: what do family offices look for in businesses? How do they evaluate businesses? And what has to align for them to be interested?
I kind of I touched on this earlier. I think the team, the team, right? So I'm I matchmake. When I onboard a client and I start to make calls, put out interviews and content, um, one pagers for their decks, things like that. I'm not doing the shotgun approach. I'm going specifically to the families who, I know like the industry that they're in or adjacent to, or could point me in the right direction. A lot of it has to do with the team, obviously. So, and I have a really strong due diligence program, right? We don't just onboard anybody. It's boutique, it's very specific. So I'll just say I don't take on deals that I don't see as exceptional, right? They almost have to be unicorns. And if that's not the case, then families aren't going to pick up the phone when I have deal flow for them. Um, so assuming that that checks out and it's a great opportunity, we'll just say I found that it had personality has a lot to do with it, right? And founders and family offices who are usually founders in their own right, they're some of the coolest people. Usually when they're in the same space, they will align on that. So having like the entrepreneurial spirit, having a track record, um, having integrity, right? And how can you tell, right, on a first call? You usually can't, but that's why the personality has a lot to do with it. Um, you don't want to butt heads. You want to get along with the company or for the vice versa, because you guys are going to be working together probably more closely than you would with other investors if they decide to move forward. Um, and that's why sometimes offering, depending on the family, knowing who wants to be on the board, who wants to be an advisor, who likes PR. And, sometimes like that's something that will, it's small and they could do it themselves, but that's something that will help get them over the line because it's trying to, maybe it aligns with their values. Um, it really varies, Prashant, but I would say you usually know on the first call, right, if profitable or not, if things are going to move forward with the people, obviously there. So it, it's hard to it's soft skills related, really. It has less to do, the numbers are already there. It's an impressive opportunity. It's kind of a vibe after that.
Totally get that. And to close this out, can
Sure.
you tell us how you look at the family office world currently, and where do you see it going from here?
Sure. So, I have a lot to say about this. So I think professionalization is something that is going to separate the wheat from the chaff, so to speak. There are a lot of inefficient family offices, and that can be kind of a drag, right? If you have a really great founder and you have a really great company and you put them together, but it takes 3 to 6 months to execute on something, um, that's just random example, that's a drag on things, right? And it takes time and maybe they don't have everything aligned. I see the professionalization of family offices in the next, again, 5 to 10 years making a big difference. I want to see more kids getting out of college and financing. I want to work for a family office. Most people don't actually know what a family office is, and that's kind of a problem in my eyes, and that has to do, again, maybe with that point. Now, something that I should have probably mentioned before, generationally speaking, is that a lot of the next generation owners or managers of the family office, they understand the value of social media. They understand the value of being out there and putting out an image, a brand flag. That's something that is 100% changing. Um, and I think that will be really good for the industry as a whole, if you can even call it that right now, right? It's nested within like private wealth management, but there's so much wealth and opportunity there. I think the reason a lot of founders and a lot of people trying to raise capital are struggling to connect with families is just because there's no information out there. It's usually word of mouth, right? That will change just as, it will become more transparent. But I think a lot of that also is on the shoulders of family offices because it will only benefit them if instead of every founder under the sun, if like your number or your email's out there calling you, if they know that you only invest in biotech or, a certain industry, that'll help you out with your deal flow, right? So I know the value that I bring to families, and a part of at Arondight, everything we give to the families is free, right? That's how we establish our relationship with them. And it's easy when I can send a link to this family office instead of, um, you know, this is an entry. Like it's some of them are difficult to find, and that's changing. That will evolve, and I think professionalization has a role, internal, external. and I think the conference space is going to evolve too, and that's a big challenge. I think in the space is that you have a lot of these family office conferences, but a lot of these people spend a lot of money, and they'll fly over a couple of states to go to your conference, and then there's no families. That's a drag, right? That's very upsetting, and that's a big issue this month, and something I pride myself with at Arondight. I'm going to Beverly Hills for Choubey Productions. Neil Green, he has a great conference, great company. He runs great conferences. There's going to be families there. It's going to be on the West Coast. Obviously, they're going to be celebrities, and it's an institutional, conference. You're going to have my client, Runtime Ventures, is going to be presenting there. Very much looking forward to that. Um, I think I'll just leave it at that, but I think the conference space is going to change very soon.
Right, totally. Thanks for sharing your perspective on the family office world and how it's evolving and taking shape and how it's changing as we speak, right? And to close us out, can you tell us where can our listeners learn more about your firm and where can they go and follow you?
Sure. And yeah, thanks for having me on VC10X, Prashant. You can visit me. My website is arondightadvisors.com. You can also follow me on LinkedIn. Probably be at the bottom of the show notes here. Um, that's it. I'm on LinkedIn and arondightadvisors.com. You'll find me if you look it up.
Awesome. I'll make sure to put the links in the show notes below. Thanks so much for coming on the show, Ryan. It's been amazing talking to you and hope to stay connected. Thank you.
Yes, thank you for the opportunity, Prashant. Really appreciate it. Love what you're doing, and hope we can talk again soon. Thanks so much.
Totally. Awesome. Thank you.